Hi, this is Shane with West Shredder. It is October 31st, Halloween. So we're going to review. Actually, everything did pretty well today. Still in sim though, and the important point on the Nasdaq here is that I didn't turn on the trading until about 8 o'clock, so an hour and a half after the open. So it looked like it had settled down enough by then to be workable. So that's a potential strategy in these times, is to let it. You can see there's no codes here because I had it off. And then here's 840 falling. And then we take a long for a loss, and then a long for a small gain at that low volume node. The market was just so whippy. There we catch a nice long for a full target. So I don't have the code here. Oh, that's right. The codes aren't here because I had reset the one of the studies, and since this is a real time, codes are coming in real time. They get wiped out when you do that. Shoot, yeah, that's right. Because I was fixing the this case here, this give back. I had found an error there. So in any case, so along here, that looks like probably a failed pullback short. First target, second target. So the target is set at 20 ticks or 20 points, 80 ticks. Then a short there, that takes a full loss. Let's see here now. And this looks like danger zone here to me. Though what you are seeing is some nice looking shorts at the peaks, 285s. Let's see. Interesting longs there too. There's a long there and there. So of these four, obviously you want that last one, but of these four, only that one's going to give you trouble. Even this is going to scratch out. There's a long here, off the 195, but no trade here. So let's see. Hard to say why. Let's make sure. So it's not disabled. So again, we were talking yesterday about how we see that when the market's moving really fast, the trades orders will cancel. But what may have happened is, let's see, if we'd taken 2 losses, we should have stopped. Let's see, did we do that? We took 1 loss there. Yeah, the way the give back system works, you've got some max value at this point here, and now it should, once you lose, the way I have it set, once you lose $200 off of that, then it should stop. So there's 100 here. I don't see another trade though, so I don't quite understand why these trades weren't taken here. Okay. And there's a scratch long, so we're still trading. And then here is a short that this is really interesting. So the short here gets filled. Again, the market's whipping around so much. One contract gets filled where I intend, and another gets a fill that's 2 ticks better. That first one gets stopped out right there, but the other one survives, and then makes a small profit there, getting taken out on that pullback. Let's see, and then that's it. We stop at 1240. So I didn't see the give back system kick in there because we didn't lose enough. So 28.25. difficult. That's in sim. Don't forget that. It's difficult to give. Yeah, I think you have to take that number with a grain of salt. There's a very subjective decision on when to start because the market's so wild. And then we do have this case where, because the market's so wild, we have some trades that are just getting immediately canceled because of the market's moving too fast. Oil plus, that would be $680. So let's take a look at that. Again, the change from last week is that this is not as strict on how clear the signal is. In other words, it's not built for as volatile a market. Catches this nice short here on the break at the value area low. 241 is a break short. I'm only trading one contract correctly today. Yesterday it was incorrect. So what happens is the market falls. We do an ad right here. So this is something we got to talk about. Because that adds pretty far away, 66.19 to 82.18 plus 19. So, the way the system is set up here is you have to go a minimum distance before it will do an ad, and I have it set for 30 because I never want to do an ad unless my break even is scratch. So I'm gonna move the stop to scratch at when I do the ad, and if I'm trading one contract, I want that at 30 ticks so I can move the stop to what will be the new entry minus 15 basically, because that'll be the average. That still gives it room, the market room to wiggle around, right? I'm actually giving myself a little more room than my original stop. So the problem is that sometimes you end up doing an ad much later than you'd like. And so I'm considering a max value. So instead of just a minimum 30 here, a minimum 30 here, we'd have a maximum value there as well. I've seen that in the NASDAQ as well, where you get into a nice run and the market will do an ad what's really late, on the order of your 15 points of profit, and then it's doing an ad just because of the way the logic works out. So something to think about there. We'll have to see if that happens more in oil. I need to reset this here. Hold on. Okay, so that was the initial short there, and then today is Wednesday, right? Yeah, so we should stop at 725, which is here, and then 7:30 is the normal oil news. The market should go crazy. It's not too bad here today. Maybe there's no oil news today. 35 is when we'd start again right here. That does not look like an oil news day to me. So I'd have to check the news and see. In any case, we pull back down to the value area low here. And because there's a low volume node right there in this 17 to 11 area, we're also looking here, starting here, we're looking for trades. That's why those bars are orange. And we get a, so what this is it's a break lower that's predicted to fail. So that break there is code 151, which says the machine learning system says the order flow pattern matches cases where the break fails. And so we wait for an up bar, and if we get one within the next two bars, then we get in. So there's that entry there. Gets taken out at a 20-tick. That should be a 20-tick trail, but that's a 15-tick gain. So I'm wondering if I have a 20-tick trail or not. Let's check that real quick. No, it's 20, so there must be slippage there then. Are these moving quick? Not really. Okay, so that's kind of interesting because I would expect this to get stopped out. I'm sorry, I'm being kind of silly here. It's 20 ticks off of here. I must be tired. So from here to here is 20 ticks. So we got 35 ticks, and then it comes back 20 when you get plus 15. So all right, get taken out before that nice run up there. And then after 9 o'clock into the doldrums, a long right there. And then the nice short right here. So this is 241. That's a break lower. So it's looking at this break right here. And it likes that. So you get short and you make 49 ticks. So it goes 69. You would have liked to have stayed in that, right? So how big a trail would you have needed? Let's see. That's 20 ticks right there. That's 30. Yeah, so 35, really too much. You're gonna be giving back too much a lot of times, probably. Nonetheless, you gotta like those entries. So I like what I'm seeing here. We'll see if that continues, and then really what we need is the replay program to be finished, so we can test that across more than just a handful of days. And then in the ES here, it's been another wild market here. So let's take a look and see what we got. Up 2 3/4, not very much. It's not very much when you consider how big the moves are. Wow, let's see. I'm just trying to find a beginning. Okay, so it's this. I went ahead and started right at 7:05 because I knew it was going to be sim. So it takes the long there for a full point loss times 2, so 2 points. We don't catch. Okay, so we don't do anything here, right? Because we're right at the point of control. All right. There's no other low volume. There's no other. Yeah, you're too far away from this low volume node down here for it to consider it. So let's see here now. What else do we have? So this looks like danger zone to me. This is something I'm worried about in general. Where you start grinding along the value area high. In this case, let's see. So that's too aggressive and that's too aggressive, that code. All 4 of these are considered too aggressive. All right. That's not, though. That's a 137, also a 121. But we don't get filled. So I'm placing the order right there. 2 ticks off the, let me get rid of that box. 2 ticks off of the end of the bar, and it doesn't, you got to get filled on the next 2 bars, and it doesn't happen here. So we missed this nice move here. It's a tough call. I'm not entirely sure what the good answer is in the ES. Would normally have it right. See, 1 tick right there. That's also not going to get filled, so it kind of doesn't matter. You could do +0. And this is a 3-tick range bar, so a 4-tick stop would have you down here, which would be reasonable to do. It's more aggressive. This environment's too wild to try that, so I wouldn't do that. Let's see. So we're outside the value area. Here's the value area high right here. So the striping means I can see the choppiness. And the choppiness defined by that point and that one for the long side, and that point for the short side. So that's why we wouldn't do anything there even if a signal came up. Get back into the value area, and at a low volume node, these 197s are a low volume node processing that we're not doing because the market's too wild, or the market's too crazy, and that's a more simplified view. Intended to catch those times where you just kind of bounce off or blow through those low volume nodes, but we're just not seeing that right now, given how wacky the market is. A short here for another 2-point loss. It's just a bit early, isn't it? No, it's just off. There's a 164 there that is. You don't get filled. You gotta like the signal. So that 198 is a low volume code, so we wouldn't do that. And we get short here for a really nice trade. This is a 202, so this is a very classic rational trader extended move reversal signal there. And when that bar closes down, you get 202. Or rather, the machine sees it, so the order flow pattern matches something the machine has seen in the past. So that gets first target, and did it get the full second target? No, I got 5 points though. The full, I think I have this set for 7.5 points. Let's see. Targets 30 ticks, yeah. So so this gets stopped on the trail. Let's get this off the screen. All right, and then anything else? Is that it? So this is a choppy sideways death trading here. And you can see what's happening is you're pulling down to this low volume node here and then bouncing off of it. You're not, this is why it's a low volume node, right? There hasn't been much trading there. And so all of these codes, 128, 297, 220, they're all the low volume processing codes that we're not doing right now because the market's too crazy. That it's interesting that this says, I think the market, it's going to blow through that low volume node. That's a 297. 228 says, I think you're going to continue lower. So these are both, not going to work out. That 128 is correct in the end, but you're going to get, if you get in, you're going to get taken out at scratch or get chopped up. So it's sort of validating. Just kind of stay away right now. The low volume node. You can see how that the market is respecting that level. It's not respect. It's not like, hey, this level's important, and so I'm going to stay away from it. It's a low volume node, so by definition, buyers and sellers don't agree on price there, and so the market doesn't stick around. When it gets down to here, the sellers won't sell anymore. The buyers buy, and up, it keeps popping up until we finally blow through it. Now, what's interesting here, that this is the kind of thing that we're sort of looking for. The reason that we pay attention to the low volume node is this fact, right? That the fact you'll bounce off of it like that, or then blow through it. These are the two behaviors we're looking for. Same thing. These are all actually 221 is okay. So that says get short, but the market never. Doesn't give us a down bar in time. So that works out for us. Short there for a loss. Just getting nicked there. That's painful. There's so much movement in the market. It's just crazy. Nothing there. Right back to the value area high. Okay, so we go through the value area high. You gotta like the little double top right there, and come back to it, and then thrash around it a bit, and then get short for a couple of points each. But in general, I look at the NASDAQ, and that gain is pretty nice. That's, what is that? Almost $500 for something, and so it seems worth it. The ES, there's a lot of movement, right? But the gain, I don't see these big gigantic gains in the ES. So I'm thinking that you're better off in quieter times with the ES. We'll find it. We'll get some real data soon here as soon as I finish with that replay program. Another long there that gets nicked. That's a little unfortunate. It's a nice little move right there. And you got to like, the thing that I like, that I have to say, is that this is the right place to be looking, and you can tell because look what the market does. The market is making a decision there, so we're correctly finding the place to be looking. Just at this point, I've set this to be really careful about the signal, and it's possible it's too careful. I'm too strict. It's possible that you just can't tell from the order flow, because the market's too crazy. Gosh, let's see here. Now we're 1210 here. We'll stop at 1240, and there is nothing more. Okay, so that's it. So I like what I'm seeing in oil. It's not, what we've been talking about is, since the markets are so wacky, let's look at other markets. So oil's looking okay there. I got a decision to make here in a couple of days on whether I want to stay with the 10-tick range bar or change it to a lower value. 5 days worth of data is not much to make a decision on, so it's tough to say without. I need to finish that replay program and then do this build a model and then run it for 3 months and see what the results are. You can't be unhappy with what it's shown the last 2 days, two nicely profitable days. Last week's results don't count because I was too strict. The model was built for a volatile market and oil's just not that volatile. So we'll have to see. I'll probably just, given that it's showing good results, I'll probably just keep it at 10 ticks. And then build the model the same way, see what next week looks like. And then, continue to get the replay program finished so that we can then use that to make a real data-driven decision instead of just making decisions on such small sample sizes, which I really, really don't like. One last look here at the daily chart in the NASDAQ. So we tested 7,000 a day and couldn't quite get through it. So the daily range is still high. That's over 240 points. At ADR, the thing about the average is it takes time for it to come back down. In this case, all of these days are, so this is why I have both subgraphs on. This shows the days range and this shows the average. So you can see, sometimes you'll see that average spike up, but it's because there was one day when the market went crazy. So you can see that back here, like right here. There's kind of one day when the market goes crazy and the average spikes up. And then it's not, if you look at this, it's not super volatile here, and the range isn't completely out of control, but that average keeps going up and up and up and up and up. So that's why they're both the subgraphs are there. Sometimes you'll see a spike like this, which whacks the average, and if you're using only the average, then you can come to the wrong conclusion. In this particular case, I was looking at, it kind of seemed like you look at this day here. And then that one, I mean, this is a pretty big difference in range. So maybe it's starting to quiet back down. Instead, today was more than yesterday, and the average is ticking back up. So this is insanely high. Anything above the red line is considered too scary to trade. So if you're standing aside, that is absolutely the most prudent thing to do. You'll hit in the morning in the trading room. You'll hear me say you'd be a fool to trade this because you're just looking at the dome. It's whipping around so much. It wasn't until a full 90 minutes into the session that it looked reasonable, and that's when I turned on the machine learning system. I still wouldn't have tried to do it as a human. It's moving too fast. So we'll see if it's possible that I'll start trading it live if I see it settle down again like that. Otherwise, just continue to stand aside, because you're just writing checks to other people if you try to trade this.